Well, I think hospitality lenders can be fickle, really. I think that there's many lenders who get in and then get out of lending. Right now, banking as sector is under a lot of pressure, and from low interest rates, really that hurts yields. Really, there has to be, and there's a competitive environment, really, that's in the hotel business. So with technology and online, type of lending and so forth, it's really forcing lenders to think outside the box, to be able to be a little more flexible in the way they do things. So it's very competitive in that. So, at the end of the day, though, it's still a great time to be as a lender, hotel lender in the hotel business, because it's a great time to build, it's a great time to buy, it's a great time to sell. And you really need to have a lender that understands the hotel business and is committed to the hotel in good times and bad times. And we certainly are. I'm a hotel development guy, and I've been 27 years, so it's unusual to find someone who heads up lending for a bank that is a pro hotel development guy. So, and that's why they really hired me, is to have somebody that's in there that knows the hotel business, because we're committed to it for the long term, in good times and bad times. In bad times, you'll see lenders run away, and we'll certainly be there. So I think it's important to be able to have those kind of relationships, that with someone who's committed to the industry in the long term, who gets it.
Depending upon the type of loan that you're doing will have an effect on the structure. If you're, by comparison, for hotel loans specifically, those loans will typically fall in three pockets, okay, or three types of loan facilities. You're looking at most likely CMBS first, a certified mortgage-backed security. Then you look at SBA, and then third you look at conventional. So each of those is going to have obviously a different structure. CMBS many times is much more favorable than, particularly when you've got an existing property. Okay, is much more favorable if all the dynamics of the scenario works much more favorable in terms of getting a hotel loan done. But that market, the CMBS market, tends to float or vacillate a little bit here and there. So it's what's applicable today may not be applicable in 6 months from now, depending upon some trends in the market. Whereas if you're doing an SBA loan, it's typically always the same, given changes in SBA loan policy and lender the lender's policy, but typically always the same. You know what you're going to get. The conventional side, it really, you've got to have borrowers that are significantly strong, and particularly if you're talking about ground-up construction on hotels, you have to have borrowers who are very solid, and then again, CMBS, SBA, they're going to be the preferred means of financing hotels.
Mostly SBAs, 7As and 504s, and the established hoteliers wants to go with the SBA products because of the front and back end load, but conventional side, I see a lot of structured loans. Sometimes it works in the favor of the borrower, sometimes it's not, and I love to do business with the SBAs if I can, because of the interest rates are so low compared to the conventional side. The down payment is so low compared to the conventional side, and underwriting is a bit lenient as well compared to the conventional side. So I'm a SBA guy all the way.
Recently, as the banking regulations that are approaching at the end of this year are coming around the corner, I do see banks being more structured about what they're doing, and there have been a lot of lenders available for hotel lending recently, and that seems to be easing up a little bit. We make SBA loans, so those are very readily available and a good option when less lending is available.
Because of the Great Recession and all the fallout from that, it seems like lenders are a little bit more strict in their lending, and they've established parameters that they stick to, whereas in the past, when things get a little hot, they might loosen their standards. Just based on my experience and what our firm does is we have certain terms. We go after certain borrowers, look for certain types of deals, and we stick to that. And I think that it's not just us, and it's probably the entire community banking industry